In Investing 101, investors are on FedWatch. Joining us for that is Ben Connard, Director and Portfolio Manager of Carnegie Investment Counsel. The Fed is expected to cut rates. Do you think the time is right?
Yeah, we think so. The job market's slowing. The last few job reports have been pretty weak, about 30,000 jobs added per month. That's not good. You need about 75,000 added per month just to account for population growth and new people entering the workforce. So we have a slowing job market, and the way to counteract that is lowering interest rates. So that's what the Fed's expected to do in September. It's the right move. Inflation's still a little elevated and really isn't trending down, but there's more risk on the job side right now.
What do people need to know who are invested in bonds?
Well, with the Fed cutting rates, that'll affect the short end of the Treasury curve. So if you think about the Treasury market out there, you can buy treasuries for 6 months, 5 years, 10 years. And when the Fed cuts rates, it affects that short end. So the 3 to 6 months. So they're going to cut rates. That part of the curve will come down. It'll affect your money market rate. That'll come down as well. So if you step back and look, it might be a time to shift some of your money from the short end of the curve to the longer end, where rates can be a little higher, and you could get potentially a little higher return.
And what about the stock market? What's your stock market prediction with Fed cuts coming?
Well, the Fed's expected to lower the rates, so the cut's kind of already baked in. If the Fed did not cut, I think that would be a negative reaction. So then with the Fed cutting rates, it'll then be up to stocks to perform and see how they do for third quarter earnings. If they do well on those results in the third quarter, which will be released, generally in October. If they do well there, and then they guide for stronger earnings going forward, the stock market will be able to keep up its decent momentum it's had for a while now.
Very good to have you with us. Thank you for your commentary.